Hello and welcome to this week's LOLC Securities Weekly Market Roundup. I am Megara Vijayman.
And I am Tharundu Amarasekara. This is the sound of profitability.
The Asian Development Bank and the government of Sri Lanka signed a $100 million loan agreement for Subprogram 1 of a policy-based loan to support and facilitate power sector reforms in Sri Lanka. The loan has an interest rate of 2% and will be repaid over 25 years, including a 5-year grace period. The reforms are intended to support independent and financially sustainable electricity utilities and streamlined and accelerated development of renewable energy. The loan is Subprogram 1 of a $300 million policy-based loan program linked to power sector reforms. Additionally, ADB has also provided a loan for promoting sustainable tourism.
According to the cabinet spokesperson Bandru Gunawardena, Sri Lanka plans to sign a preferential trade agreement with Indonesia by 2025 March. The exact details are to be finalized by December 2024, and the main intention is to expand the country's export potential.
Indonesia currently enjoys a GDP of $3.927 trillion as at the end of 2023. This is expected to increase by $719.1 billion between 2024 and 2029. At present, the Indonesia-Sri Lanka bilateral trade stands at a value of $369.7 million throughout 2023, the majority of which is exports from Indonesia to Sri Lanka.
As official data shows, Sri Lanka's forex reserves fell marginally to $5,649 million in July compared to June of $5,654 million this year. In June, the central bank sold about $57 million in the interbank market after a spike in liquidity from previous strong dollar purchasers and a rise in private credit. At the current interest rate structure, the central bank has collected foreign reserves and also paid down its own borrowings, leading to a steady improvement of the net reserve position. Sri Lanka's gross foreign reserves include gross monetary reserves of the central bank and government balances, which are usually made up of foreign loan receipts. And now for the corporate highlights.
Tokyo Cement Group recorded a total turnover of 11,665 million rupees for the first quarter that ended in June 2024. Despite increasing sales volume, the overall drop of turnover is mainly due to the price reductions in the corresponding quarters.
Total profit after tax was shown at Rs 707 million, which is an 18% year-on-year decline. The company also experienced 2 downward price revisions, which brought the maximum retail price of a 50 kg bag of cement to Rs 2,250. The government plans to resume infrastructure projects worth an additional Rs 55 billion, creating a positive outlook towards the industry.
Sampath Bank has registered a profit before tax of 18.5 billion rupees and a profit after tax of 11.1 billion rupees for the first half of 2024. This reflects growth rates of 40% and 45% respectively compared to the corresponding period in the previous year. The Sampath Group also reported profit before tax and profit after tax figures of 19.7 billion rupees and 11.9 billion rupees respectively, reflecting growth rates of 47% and 55%. The bank experienced growth in LKR loan book by 33 billion rupees and also enjoys a strong growth in the LKR deposit portfolio amounting to 115 billion rupees. Time for the international highlight of the week.
On Thursday, the US stock markets had their best day since 2022 after the equities had a solid rebound and the bonds fell overall. This is after the labour market data eased any fears about a possible bigger slowdown in the world's largest economy.
Notable individual rises included pharmaceutical giant Eli Lilly, Silicon Valley giants Broadcom, Intel and Nvidia. The Dow is up 3% from its Monday intraday bottom, the Nasdaq 6% and the S&P 4%. The S&P is comfortably on track to match its average annual return of 9.5% over the last 50 years.
And that's it for this week's LOLC Securities Weekly Market Roundup. No matter what investment decision you make it with the right intel. We will see you next week.